Sunday, the 23rd of April, and we are on the Australian dollar US dollar. So let's have a quick recap of this market from last week in relation to our Sunday analysis, and then we'll have a look at the market for the trading week ahead. Okay, so the market, we identified the double top, and whilst the market was sitting up at these levels, expecting that move down or watching for that move down. On the way down, we identified the central pivot level as a potential area to watch for those bullish positions. Market comes down, tests those levels, and we see a bounce. Now, last week, what did we go over? Well, we went over how this level right here was still key support. Although the market had made a double top, we had first identified this level from the central pivot of the double top, expecting the bounce. We got that bounce. So if the market is coming back down again, this remains good support. And we also went over how, only if the market begins to break below these levels, now are the bears once again taking control of the market. Now, the reason it is important to just let price action dictate what you're doing rather than having a firm, fixed analysis. And I'm going to show you a couple of different things here. So the first thing is, we let price action dictate that this was the key support. We identified it first from here. It reacted. It confirmed our level. So we knew that if the market was coming back down again, we could continue to watch at these levels. And for the double top to be confirmed and the break below to happen, we would need to now see the market breaking below the levels that were identified as we came down and tested. Now, the reason it's important to just follow price action is because, so last week when we went over this support level, I seen a comment from someone who said, why would you be looking to buy into this market? There's no point in buying into the Australian dollar, US dollar. It's clearly going down. And they identified a level. I can't remember what level they identified, but that's what they said. It's based on opinion rather than price action, because the price action is not telling us that we're going to see that strong move down. It's telling us only if we start to break below these levels are we going to see the move down. And what do we see? The market coming down. It's coming down strongly here and here. This is the bears after the double top, looking at this as a retrace and forcing the market back down. But then what do we see? We see support. We see support holding at the key levels once again. And this is the exact reason why we identify it as support rather than using our opinion, because we've tested it, the market comes down, what happens? It bounces. And what did we also identify? We identified the MA200 as an area to watch. And we can see as we come down here, we pop above the MA200, we then come down, we bounce. What do we reject off? The MA200. And the next day, we press higher once again. So it's really, really important as a trader, especially if you're day trading, to just let price action tell you what to do. There's lots and lots of times, I'm sure the subscribers will tell you this, there's lots of times where I'll analyze a market, let's say on the Monday, and I'll be bullish. And I'll say, okay, we're bullish in this market, likely move is up to blah, blah, whatever. And then the Monday price action will finish, we'll start the Tuesday morning, and something completely different will now be identified because of what's happened on the Monday. So you have to be willing to change your analysis. And you don't just want to use your opinion. If you're a price action trader, price action is essentially it's like a map or a code, whatever you want to call it. It's telling you everything you need to know on the chart. It came up, it tested here, it pressed down. It came up, we started to see rejection. What's it instantly suggesting when you can only see this? Is it suggesting that this huge move up is going to continue? Well, potentially, yes. But it's also suggesting we're seeing the start of a double top. So you have to be willing to change your analysis. We've had the long move up, the market is bullish, we make a pullback into an area of structure, we then begin to bounce very, very strongly. It's bullish. However, price action then starts to tell us, well, hang on a second, potentially you are wrong here. Potentially the sellers are going to step in. And that's why it's important, guys. You're trading to make money. That's the overall aim. Even if you're just a beginner and you're just learning, you're on a demo account, your overall aim, I'm presuming, is to make money at trading. And the best way to do it is just let the charts be correct. The charts are always correct. They're correct when your opinion is correct. They're correct when your opinion is incorrect. Let the market dictate what you're doing, and you're not going to go far wrong. Okay, so for this week, not a lot has changed, to be honest. We still have this key level of support. It's important. It's only if we start to break below these levels that the bears really are taking control once again. If we do break below, pulls back, great to watch for resistance and those potential sell positions. And then what are we also looking at potentially? Well, the first thing is we're sitting right on the MA200. So although we've made a nice move up on Friday, it's straight into that MA200, hasn't broken through it. Potentially we're just going to see the resistance come back in and the market break back down. However, we are also potentially seeing a small double bottom. We have to be aware of that. It adds into the analysis of watching this again for support. If we start to break up, where are we going to watch for resistance? So this is a double bottom, potentially, especially if we start to break up, we can say it's a double bottom. Where do we look on the double top for potential support? We watch the central pivot. So on the double bottom, does it make sense to watch the central pivot? Yes, it does. For the exact same reasons. And what you can see is the market has already tested these levels a number of times. Just going to mark them in. Surprise, surprise. We're seeing structure line up with the levels. Tested, 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 broke through, came back up, tested, came back down. If we start to break up, test these levels, it's good to watch for that resistance. If we start to break above, you're going to see people who trade double bottoms looking for that breakout. We have more key levels up here. And then we're back into the highs of that double top. So potential support if we break through, potential resistance. Resistance if we start to break above. Again, potential support. On the back of people looking at this as a double bottom and a breakout, we have resistance and resistance up above also. Okay guys, that's everything for this week. I hope you all have a great trading week next week. As always, I hope that was helpful. I'm James Orr and thank you.